The issue with corporate tax incidence is pretty simple. It means where's the burden actually hitting in the economy and which individuals or groups of people are being truly impacted by it. Overall, it's a pretty obsolete way to collect taxes. It's a failure of the progressive era of trying to find new ways to replace consumption-based revenue with productive-based revenue, to build a more efficient government and to build a government that served the will of the people. Now, really, what it ended up doing was serving the will of the politicians, but neither here nor there. It doesn't work. It's inefficient. It doesn't really collect anything of substantive value to the federal revenue pie. And when you compare it against how much we spend, it's actually even less. It's about 5% of U.S. spending. Is what the corporate tax accounts for. And not to mention, it incentivizes a lot of antisocial behavior, including freezing profits offshores, distorting investments, or offshoring or inverting businesses altogether. And what it does feed into the political illusion that corporations are paying their taxes, or attacking big, wealthy corporations, and the rich are paying their taxes. Well, the rich are employees of these corporations. The corporations itself can't pay a tax. The corporations are a business entity, right? It's a fancy group of paperwork. It's a business model. It's a business model that scales well. It's a business model that works, especially in large modern economies, especially when you think of publicly traded companies. That allows for investments into portfolios and long-term asset management. Corporations actually serve a great social purpose. Like most things built by human beings, can they be distorted to do bad things or perverse things? Absolutely. But overall, the collection of corporate tax doesn't really work well, and there is no really fair share that is happening. It's actually hitting workers, savers, pensioners, and overall shareholders. Think of it like funnel. The corporation is this funnel. Now, when you pour taxes down the funnel, it just doesn't sit there. It's going to flow down and go to its requisite areas. It's going to hit workers, shareholders, and consumers. The funnel itself doesn't hold anything, just like the corporation itself really won't pay any taxes. It's going to be distorted elsewhere. And really what it's going to come down to is where and who it's hitting. So if you think about, like, with Tesla, right, when the corporation actually gets the tax bill, they're not having to pay that from Elon Musk's bank account. What's going to happen is Tesla's a corporation, the bottom line is going to have to pay part of their bottom line to the federal government. But for the most part, they're going to delineate that cost to their workforce, their labor force, the people who are invested, the shareholders, 401k holders, pensioners, people who are going to be investing in Tesla. Well, now, since they have a smaller bottom line, not as strong returns, not as great as portfolio growth. And of course, when all else fails, it's much easier to pass along the cost of that tax to consumers. And that's where it's going to happen. Okay, when you mail the bill to the corporation, right, that mailing address, right, it can't pay a tax. The mailing address is just a placeholder. The people who are working there, the people who inhabit that place, are going to be people who are going to be paying that tax. So when you think about also the double taxation problem, where corporations are going to be taxed twice on the same stream of income. So their profits come in, they're going to get hit with a 21% tax. They will distribute after those tax profits get hit as dividends to shareholders. Those shareholders are going to pay anywhere from 15 all the way up to 23.8% tax if they get hit with the net investment tax. So overall, it's a 40% tax rate on corporate revenue, which for the most part, I think a lot of people will consider that a quote-unquote fair share, but it's incredible in terms of how punitive it is. When you think of dividends, those are people who are investing, taking after-tax dollars for the most part, and investing, saving, having delayed gratification in terms of not taking the immediate profit. You have to hold those shares for a while in order to gain the dividend. And you're doing all the right things, and all you're getting hit with is a 40% tax bill in all intents and purposes. It creates a lot of bad incentives for not saving, not investing. And when you look at it again from just an individual shareholder standpoint, all right, tax gets hit at 21%. Dividend tax can come in anywhere 15 to 20% for just the average American shareholder, taking away the net investment tax. And when you look at from $1,000 dividend, or worth of dividends, I should say, you're taking home $670. And when you think about how this can absolutely impact, that's just one average American shareholder, there's millions of people invested. It's a hit to a lot of people. And unfortunately, you think of people who are retired, people who are on pensions. Those are some of the most vulnerable people in this country. And once again, a tax that was created to attack the wealthy is always, once again, hurting the most vulnerable. And the CEO misconception here comes down to when you tax Apple, Tim Cook is not getting the bill. He runs Apple, but he is not Apple. Elon Musk is not Tesla, he runs Tesla. Jeff Bezos helps operate Amazon, he is not Amazon. So when you're thinking about the idea of attacking the rich, one, all this idea feeds into is class warfare. The wealthy have too much money, everyone doesn't have enough, I need to take some out of their pocket to make things equitable. Feeds into a very, very dangerous line of thought that has wrecked countries, wrecked continents. The ideas of socialism and class warfare, it doesn't work. It doesn't lead to stable societies. Forget about the economics of it. From a societal standpoint, it's a total devastating factor. And then who really bears? If you look at the studies, depending on which institute you're looking at, but for the most part, labor does bear some type of burden in some study. When it comes to the Brookings Institute, they found that workers almost pay up to 70% of that tax. That's how the corporations will pass that along. Consumers will also get it, and then shareholders will take a hit as well. For the most part, working Americans are bearing the burden of this tax. And when we think about going back to that CEO myth, right? Wealthy CEOs are not paying anything in a corporate tax, right? They're going to pay their individual income tax. And through their stock options, they're going to pay capital gains tax, but the actual corporate tax itself, they're not paying it. Okay, once again, it's the entity that they work for is it's just getting taken out of their bottom line. So workers are getting hit, retirees are getting hit, customers are getting hit, and then when businesses no longer want to invest or have less capital to put in research and development, well, their physical places of doing business, their factories, their facilities, everything, well, those communities are going to get hit with less jobs, less capital flow. And so there's a lot of secondary impact kind of things happening here that are going to be devastating to the economy in total. Once again, it's really important to focus on not just labor getting hit, but depending on how you look at it, workers will take a smaller hit, but then shareholders take even the greater burden when it comes to the CBO study, when it comes to who pays the corporate tax. And then the U.S. Treasury, in a qualified study, found that once again, of course, labor's taking a burden, but people who are owning the shares are going to be taking a hit as well, which once again, these are everyday Americans bearing the burden of a tax that's supposed to be attacking the wealthy. So it's really kind of a antiquated system that doesn't do anything in its intended goal, and it doesn't do it well either in terms of like nominal value. So it's legal fiction. A corporation is a business model. It's an entity. It's not real people. You can't tax an entity. You're going to hit people with it. It causes double taxation. And once again, it hides the true cost from the voters. And it feeds into that myth of attacking the wealthy in the name of justice. So there are other ways. Estonia and Latvia do a pass-through system where the shareholders actually get untaxed. The corporate tax, corporate profits are just, once again, not hit once. It's only at the shareholder level through personal income tax. So therefore, they've eliminated double taxation. And once again, the voters can only see if they are investing in corporations on their actual tax bill or tax returns on what they're paying. So they kind of got rid of the idea that corporate profits, corporations can pay taxes. It's going down through the individual level, trying to not hammer corporations twice. Or at all, once again, at their profit-based level, encouraging them to use their profits to then invest back into their business, or once again, they're going to be paying it out through their stocks or shareholders. The consequences, though, of having a stagnant corporate tax system, is you're going to get offshoring, you're going to get job relocation, corporate inversions or tax havens, where once again we're using trillions of dollars offshore, we're freezing them offshore, refusing to invest back into the U.S. Because once again, capital flows where it's welcomed. And if capital is going to get hit, it's not going to want to take it. And corporations, U.S. corporations, are in the business of maximizing profits. Well, if you can't maximize profits because the government's going to take 1/5 of your profits, you're going to look elsewhere. And that's what's happening. And unfortunately, once again, who gets hit with it other than just lower shareholder returns? Labor's going to take a hit. Wages are going to take a hit. Investment for future jobs are going to take a hit. The workforce is going to take these unseen hits. So what can be done? Well, once again, corporations can't pay it, and workers are getting hit with the bill. Double taxation's hitting a lot of people, and overall just feeds into this false political illusion. So imagine just getting rid of it, not punishing corporate profits, because once again, profits are a reflection of meeting consumer needs in terms of goods and services. So I'd say reward the companies, abolish the tax altogether, and to meet that, it would be a 5% reduction in spending for the federal government, which once again, you can do that across the board. Every department, no one's quote unquote safe, and no political games are being played by hitting one department over another. And through that, you can actually achieve some actual spending reform with real long-term tax reform that can benefit the business environment here in America. Some other ideas, once again, with the 5% cut across the board, you can do subsidy elimination, once again, corporate welfare, get rid of corporate welfare. Entitlement reform means testing, making modernizations through AI software to get rid of duplicated programs, to get rid of paying dead people, to get rid of paying false claims, and all these things can be done to really reduce entitlement reform. And GAO estimates are close to $250 billion when it comes to entitlement reform. Defense Department should not be, once again, seen as a sacred cow where you can't touch or cut at any time, at any moment. Their accounting measures are a disaster, and most basic accounting reformations could actually probably bring anywhere to about $100 billion worth of savings. And already, by just looking at also beyond what we're looking at here, just what Doge has discovered and just wasteful contracts and wasteful grants, the savings are everywhere, and it can be done quick. It can probably be done painless, and you never actually have to touch true entitlements like Medicare, Social Security, where seniors don't have to have their benefits touched, and you can actually reform the government in a way that's painless for the most vulnerable, and reform an actual business environment that needs to figure out how to be long-term sustainable, to continue to be the global hegemon in the economy, to dominate moving forward, because once again, economic security is national security. The pathway is there. It's not looking at 50% cuts, looking at a single-digit cut to create something that could be really, really positive for the economy. Right? A 5% spending reduction could lead to the beginning of the rollback of the U.S. tax system. So it's not only just good economics, it's not good for workers, but it's great for great for the America, it's great for the future, to reindustrialize America. It's great to kind of also, as the economy is going to rejigger with AI, and we're going to have to figure out how can we move forward. Well, let's make sure we have the most investment, we have the most friendly business environment here in America,